Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, June 18th, 2025. So, first of all, I'm sorry about last night's video. As I said, I was having some issues with Camtasia. I ended up having to get the newer version, but in any case, the Fed left rates unchanged, like everybody kind of thought they were. He's still coming up. I don't really understand some of his reasoning. I mean, I'm not a big fan for cutting rates right now. I think that they people need to get adjusted and say that, this is where rates have been, that the average rate, interest rate has basically been in this area for the past, whatever, more years than it's been at zero interest rates. And the zero interest rates it's just not sustainable for that. I know Trump's calling for it, this and that, but I don't understand what his rhyme and reasoning on it. He's been wrong about pretty much everything. He may end up being really wrong about this as well, but we'll have to wait and see. But in any case, it's really I didn't think there was gonna be. I mean, the only thing, the shocker that I thought was gonna be was that, if he was a little more, hawkish, in which he was kind of a little bit, but they still said that they're looking at, 2 cuts in 2025. I think that's gonna be more data dependent, and I gave that reasoning, with this whole, Iran, Israel war that we're kind of sticking our nose in because if there's an oil disruption there, and really Iran, we don't really, I don't think we get that much oil from them. We may get some, but China is the one that gets 80% of it. So if they get cut off from that and now have to go for someplace else that maybe is more expensive, they're going to start raising the cost of production, which will then come circle back to us here with regular goods. But it's a big, there's a lot going on, a lot of moving parts, and I'm not even going to say that I'm an expert in it at all. I do have an idea of what can happen from it, but in any case, this is really what matters, and it's this the wave structure right here where we have a clear one, two, three, oh, sorry, four, five. Now the thing that's backing this, and again, this is a daily chart. We have some really massive bearish divergences here. So if this is, it's going to play out when, whether we have to go up to 6,200 or whatever, it doesn't really make a difference to me. I just know once this completes, the odds of us coming down and testing this 54.44, or even more likely down to this 5,300 to close this gap, the odds are pretty high. So this is why I said I did not mind missing the last 1%, 2% of the move when we got out here, because we actually had the easy money on it. So these people are battling here, and the thing is, this is when you're in a wave five of five. It's thin ice. You don't know when that ice is going to break, but when it does, we'll probably come down. We'll find some buyers here that will get up, but then they'll get trapped when this gets taken out, and that's when you'll see the velocity of change really start to pick up on the downside. But right now, it's nothing's really been broke. You can see this support right here is important, and that's at the 56.70, 56.60. I'm sorry, 59.60, because that's this where the wave three ended. So if they lose that, then there's a good shot we're going to come down and test this 58.33, or even come down to the 57.11 area. But as I said, that bounce I think is going to get, especially if we break this support right here. Let's hang on one second. Okay, so if we turn around and break this support right here, and then what will happen is if we come back up again and we test this support and it gets rejected. So if we come down and come back up here and it gets rejected and then come down, that's when I really think we're going to see some panicking in the market. But so far, these lows, they're holding. You can see they've been tested a couple times. But again, the wave structure and these bearish divergences on the daily are throwing up some major red flags. This is the triangle that I showed you. I thought maybe it was going to go up to here. And it actually, didn't even come close and actually broke the bottom of this. It's hanging out right there. It's trying to hold it, but if they break it, we're looking at a move that's going to be coming down to the 5880. That's this triangle right here. If for some reason they hold it and bring it up and take it out of this, then we're looking at a move up to the 6140. But right now, it looks like they're going to break it to the downside. It's just really tough to say because we're pretty oversold right now on the hourly chart. But again, I think the geopolitical landscape is really has some people on edge right here. Let's take a look at the 15-minute chart. Now, this, you can see this trend line. It's what being watched. Where we came up, it was used as resistance, came back up again, used as resistance, and came down and held this support. So this is a descending triangle. And again, if the pattern plays out, we can just identify the patterns. It doesn't mean that they're going to play out. But if it does, what we want to do is get an idea of where the downside target would be. And it really basically, this would be it right here. If this takes it out, we're looking at a move down to the 58.95. Now remember, this pattern's looking for a move down to the 58.80. So we're in this pattern, and the other one is both looking for a move coming down someplace into this area here. So that's still another, we're almost another 100 points down from where we are. And again, that's where if we take a look at the daily, if we went down a little bit further than that, here's where the 50-day moving average is, and that's the support right here. And so that's at the 58.21. So this is where I believe that we would possibly see some buyers step in and bring it up because I don't think it's just going to be the pattern that's in play because you can see there's really no support until you start getting down into these levels. And remember, we still have this open gap at 58.08. So again, there's red flags. Nothing's really been fired as far as a big blow to the downside yet, but they're jumping on these support lines, and the more they jump on them, it's like jumping on that thin ice. When it gives way, it's going to go pretty fast to the downside, and it may take longer for this to play out. I'm not really quite sure, but as I said, there's a lot of red flags out there. The wave structure is that way, so I would be pretty careful, and I like waiting for a pullback to to pick up some quantum stocks on a discount. So tomorrow is Juneteenth day, so the markets are closed. I wanted to get this out tonight just because I felt really bad about missing last night's report. So this is that, and with that, I will talk to you guys on Friday. Have a great day off.